Hi guys, weekly market outlook, and next week is going to be an exciting one. Why? We want to find out now, and any comments obviously by you guys from the audience, highly appreciated. We also will take a look at the CFTC Commitment of Traders Report and check out how information can potentially guide you for trading insights. So let's get going with market opportunities. What's important this week? Well, we had news events, not that many, but we got kind of into some sort of roller coaster moves on one side. On the other hand, equities resumed their upside, and that's likely going to continue. The strong amount of positivity might fuel further positive sentiment. The potential support by the Federal Reserve, reducing interest rates, might actually add, short-term at least, might add to positivity as the S&P 500 among major other indices are going to move to higher levels. Let's check out the economic calendar this upcoming week. CPI, consumer prices from Canada, expected to be on a slightly weaker stand. Looking at medium-term momentum, trimmed figures 2.8 down from 2.9%, and that might spark as well some sort of slight weakness in the loonie, as the Canadian dollar is called. Let's check out the open trades here. The euro Canadian dollar might actually kind of be extremely interesting. Moving forward, sell stop opportunity below the 149.75 area. If the market's trend might change direction to the downside, we might see the euro CAD actually trending to the downside even further. Holy moly, the dollar, US American dollar against the Canadian is obviously kind of weak. The recent support might cause some sort of downside motivation, and the long-term trend obviously kind of in favor of the Canadian dollar. Trend-wise, 50 moving average broken, downside potential going to emerge. The resistance area kind of lasted. The support area being basically broken, and the market might now kind of cause a further clash here, causing the loonie, the Canadian dollar, to potentially gear up some stronger momentum. Any chances that the weakness or weaker figures in consumer prices might cause the Canadian dollar to weaken, the euro CAD to rise, and the dollar CAD to rise could be used as selling opportunity for potentially fresh trading positions. That's at least on the horizon. FOMC meeting minutes on Wednesday. Well, a couple of weeks, 2 weeks after the interest rate decision. And guys, we remember no change was happening. Federal Reserve Jerome Powell, he's just like wobbling around. Yes, maybe, no, I don't know, whatever. Ever since he had been in office, we saw that all these highly political movements or say press conferences were based off nothing much, and hence this FOMC minutes might give us some sort of further insightful momentum. However, the huge amount of gathering of information likely not going to happen in this one, but let's check it out on Wednesday what goes. The Eurozone and participating countries are gearing up momentum. Purchasing Manager Index from France, obviously quite weak, and the German locomotive, let's check out manufacturing, has been really down, and it's not expected to be better. Political decisions, my home country, the Greens, the left wing, and the Democratic FDP party, they're not really doing anything much apart from talking, supporting the economy financially, but not offering a clear statement, clear sentiment. Hey guys, go out and work harder. Start your companies or corporations in Germany instead. BASF, the huge company from the chemical sector, is moving away from Germany more towards the Chinese hemisphere. Why? Obviously, a kind of energy prices are still on the rise, and that's the dead end for the German overall economy, since it's kind of highly energy incentive, and high energy prices obviously increase the debt burden and the cost for such countries. So flash manufacturing PMI, interesting. The services sector has been better, one of the drivers of inflation. If I every now and then go back to Germany, I'll find the difference myself as well. Looking at restaurant visits in particular, prices have been rising quite dramatically, I might say, in recent years, and no change expected, hence purchasing manager index still on a higher side comparing it to the manufacturing sector. British pound wise, we got similar figures, and we can see here how these numbers, well, it's a purchasing manager index, it's a survey, right? So, but still, it is on a better end in the UK, the British pound, obviously at the moment at interesting steps. And let's move towards the current trading opportunities here. The buying trade in the pound US here has been moving up nicely. A buying order has been triggered. The market actually kind of nicely broke the resistance area. So now upside might kind of cause further higher levels. And who knows, the upside potentially going to unleash further momentum in the market if at least the figures can maybe as well complement such positive views. To the extent unemployment claims, and they had been not bad in the US, right? Let's step back. Slightly weaker last week, or this week we have to say, still this week to get the information going and sorted. Unemployment claims, they might actually be kind of quite interesting, right? So maybe, and 227, there was the figure from this week basically. Maybe we get further information here. Any slight weaker numbers might strengthen the dollar. However, and that's the general trend, the shift in the economy, the shift in environment of trading has moved away from the inflationary environment basically towards the economic development, and unemployment claims gearing up some momentum. I wouldn't be surprised if we see some fresh weakness in the greenback, the US dollar, cemented basically by also the dollar index. Here we go. And we got the dollar index basically fairly recently with some slight positivity here. Pin bar candlestick off an interesting support area. Is this zone, we're talking this one here, going to last? Well, the current candlestick here from this week needs to clearly find upside potential. At the moment we see that should be a little bit of a falling trend line here. The upside potential should be seen. It's not going to be the case at the moment. So any break of the lows here might unleash downside potential, and downside potential in the dollar index obviously causes the US dollar to weaken, which is exactly what we see. The pound against the greenback, the US dollar we talked about. The euro is gearing up momentum again, and that's a reflection of clearly that zone here in the US dollar index, pretty much a reinversed curve. Euro dollar exchange rate looking to that or at that, comparing it with the dollar index. And that said, upside momentum, the US dollar is likely going to weaken even further. Our option, we sold a put in for all options traders out there. We sold a put in the Aussie against the US dollar. Some nice premium in hand. For now, the market looking positive here. The option likely expiring worthless. Our hedge position actually a sell trade here. In this case, still on. So let's see, the US dollar is positively, at least positively inhibiting this market, or say rather positively in terms of downside momentum in the dollar, upside momentum in the Aussie, and hence the chart is moving to higher levels. The Aussie, again, recap, right, seems to kind of tell us positivity for equities are going to be seen in the near future. Our long position in the S&P 500 is up and running. Here we go. The market's pin bar candlestick pattern really tells us nicely. Support zone, the market fell initially, then came higher, and this week basically upside might be seen even further, all the way towards maybe the next line here in the sand, 5,600 something, 5,650. Next resistance zone potentially causing slight retracement, but all markets are positively behaving. The S&P up, the Dow Jones up, the Nasdaq, all of them are moving up nicely. Even the Nasdaq has crossed basically this week. The 50 moving average is now back roaring actually to higher levels. Positivity being clearly the key sentiment here. Canada figures, retail sales, well, something back-stepping or looking back as a backward-looking indicator, not too much. Jackson Hole is the upcoming thing this next weekend. Jackson Hole Symposium, Wyoming, could be something interesting. More on a background story. Basically, central bankers, economists are meeting up there to discuss the state of the global economy, interest rates, and such. So that might give us some sort of impactful momentum on a kind of, or looking backwards, what the economy has been doing and how potentially the outlook from central bankers might be. We don't expect anything major, but there could be one or the other points in volatility. So switch on and check it out on how this news event is going to go. Now, the CFTC commitment of traders report is out. That's the figures we just received yesterday from 13th of August. So those are the numbers from Tuesday this week. Those figures reveal actually positioning of, first of all, professional traders, right? As well as compared to non-reportable positions here on the right side. So basically retail traders. If they differ, and if they differ dramatically, this could give us a certain trend direction. What we might expect, and we can see here, 86,000 long, and that's the dollar against the Japanese yen momentum here, against 63,000 short in the Japanese yen, comparing it to 36,000 long non-reportables towards 35,000 short reportables. So there's not a change, but at times we have figures being kind of inverted, right? So that the big guys are basically already long a position where the small guys are maybe short. And that tells us that usually the market trend, the market changing direction had been in favor of retail traders, of you and me. These guys are in front of their screens and trading markets because why the big guys, the commercial, non-commercial positions have obviously been rather kind of lagging behind, and before they change the direction of the market, the local guys, I might say, or non-reportable positions, traders like you and me, have already switched their positions and hence obviously caused the trend to change direction. What we can see from this release here is that clearly the guys, the big guys basically, in terms of long positions, they had increased long positions. And what's happening? The dollar against the Japanese yen has been falling. And that's one story we can see here based on this trend. Number, again, from Tuesday this week, but the market had fallen last week. And who is now on the right side of things? So we might say, basically non-reportables, us, are already in a long trend. We have, so to speak, reduced our positions slightly, where else we had reduced short positions even further. Whereas on the other hand, the professional traders, they have reduced their short positions as well, but they have massively poured into long positions. So that tells us that the carry trade is not over, but that the carry trade might get and gear up some sort of certain further direction and further trendful momentum. We're not far off from our markets end at the end of the month of August. However, looking at the market trend in the dollar Japanese yen currency pairs monthly chart, yes, the market might gear up momentum here and could be ready at the next, depending on how the market goes, at the next couple of trading weeks, say. So this pin bar candlestick on top of this basically rising trend line, telling us that the market is clearly in an uptrend, right? And this uptrend might continue. However, it might only continue for a while before another trend change in direction is going to be seen. The US dollar, as we examined earlier on, is weakening basically slightly and is holding steady at the moment against the Japanese yen. But let's focus on the CFTC's commitment of traders report, CFTC report next week, to see how the market gives us further insights here in regards to potential further positioning. That's now the part for fundamentals and the beginning of some technical analysis. What else do we see? Stock markets rising, gold prices rising. Our trade in gold, we sold the market. We broke, the market broke the resistance area. Our buy stop triggered. The market's now on track to higher levels. Is this an indefinite momentum move? No. But might this tell us that the market falls all the way back to the breakout zone? Yes. And could we enter the market again if we fail to break the breakout zone again towards downside areas? Yes, because if the market tests or retests the breakout, we could find some some secondary entry opportunity and gear up some momentum potentially for upside full prices here. It looks good. The 2,500 resistance area has at the moment been broken. The weekly chart based on this pattern looks kind of quite positive. The longer term chart, looking at it from the gold price monthly candlestick pattern, looks kind of positive as well. And it looks like the market's ready for another break to the upside. Looking at silver, it is somewhat lagging behind such trend, but also silver is moving back to higher levels. With that, we can observe this pin bar candlestick basically from last week all the way towards the 50 moving average here had lasted, and the market is now ready to break higher, we might say, based on recent and current trends. So what if the silver market also increases its value? Obviously, silver kind of more of an industrial metal for causing price momentum based on fluctuations in the demand and the supply from the industry. However, at the moment, the figures have been kind of quite steady. It's looking positive, and that's exactly how and what we trade. We trade what we see, and that's basically the clear breakout. Resistance broken, support again, resistance again. Is that now acting as resistance, this area here right now, or is that, which is what it's rather looking like, acting as a support since we broke the 50 moving average? Any slight retracement basically might be causing a positive market sentiment here to the upside. So silver looking extremely positive, and with that we might be in favor of upside full momentum here in this market. Cryptos, what's next? Bitcoin, well, it wasn't rising sharply, but it's rising somewhat at least, and 50 moving average tested, weekly chart after the, should we call it flash crash, after the strong correction in the equity sector on this Black Monday, was able to regain and capitalize on momentum. So now the market looks pretty cool. We got a little long position as well here, so that's looking quite fruitful. And the pin bar candle acts as a nice support. The 50 moving average acts as a nice support. Any move higher might increase the value for Bitcoin. Ether basically similarly looking positive. However, it is lagging behind below the 50 moving average. The interesting part, gas fees for Ether had been reduced. This in the past was meant to be a positive sentiment, obviously, or positive sentiment indication that a bottom of the market at such point had been found, and rising momentum then thereafter causing positive momentum. At the moment, Ether doesn't really tell us anything much. We closed our long trade, the market is in a sideways pattern, but it might actually cause upside momentum. Any buying opportunities might be used here. 2,900 previous support area, now resistance. If broken, the upside could continue. What else is due? That's most of what we see in markets. Let's move towards some of the commodity currencies here even further. Euro Aussie may be weaker. A resistance area, downside momentum, daily charts look good, and the weekly charts look even better. Euro Aussie could be prone to further prices to the downside if the recent trend is going to continue. The euro against the Canadian dollar equally looking positive, as the market potentially is going to trend to the downside. We examined this one here, one of the currency pairs, kind of quite cool looking here. If the market doesn't move beyond the upside here, the downside below 150 psychological support might intensify, and hence obviously causing market momentum to weaken further. And the euro Kiwi, euro New Zealand dollar, similarly interesting here right now. Line in the sand, previous resistance here, and now support on the right. Again, let me kind of move this in here. If this support broken, downside potential could be unleashed, and the market momentum might unfold towards even further losses. So next week, up and coming, news-wise, CPI data are maybe something worth a consideration, especially from Canada. Jackson Hole Symposium towards the end of next week. In between, we got the FOMC minutes, which might release and reveal some further information. Apart from this, geopolitical tensions are a big story, obviously unfolding further. Oil prices we'll examine next week. Stay tuned, leave your comments under the video, and don't forget to subscribe to our channel for always further and fresh updates. See you next week. Take care, guys. See you then. Bye.